Welcome to the Deep Dive. This is where we take really complex stuff, break it down, and hopefully give you some clear, actionable insights. Basically, a shortcut to being well-informed. And today, oh boy, we are plunging headfirst into the story everyone's talking about. Bitcoin.
Hard to avoid it right now.
Exactly.
Yeah.
It hasn't just recovered, it's blown past $90,000. A completely new all-time high.
Astonishing levels, really.
Which leads to that burning question we're hearing everywhere. Is it too late? Have I missed the boat? Or is this thing just getting started?
That's definitely the core question. And this deep dive, it's based on looking closely at recent market analysis. We want to give you a really comprehensive view of the forces at play, the different arguments.
I'll cut through the noise.
Yeah, exactly. All the perspectives around this huge crypto milestone.
So our mission today, it's not just about what happened. We want to help you understand the key drivers behind that price. What are the arguments for more growth? What are the arguments against?
And the risks. Can't forget those.
Absolutely. And crucial things for you to consider if you're thinking about this market at all. Really getting to the heart of what matters.
Let's do it.
Okay, let's unpack this. This incredible journey, Bitcoin crossing $90,000. I mean, honestly, a level many thought was maybe years away.
Right.
If ever.
Right.
So how did it get here? What was that perfect storm of factors, especially maybe over the last 6 months or so?
It really was a confluence, a kind of perfect storm, like you said. Probably the biggest single factor everyone points to over the past 6 months is the approval of those Bitcoin ETFs, exchange-traded funds.
Right, the ETFs. That felt like a big shift.
It was huge, not just because it opened the floodgates for institutional money, although it did that, but it was also a game changer because it plugged Bitcoin much more formally into traditional finance.
Made it easier to buy, right? Like a regular stock.
Exactly. Just as easy as buying a stock for many investors. So that dramatically boosted accessibility, liquidity.
Yeah.
Then you've also seen sort of quietly building more companies actually adding Bitcoin to their balance sheets, to their treasuries.
The corporate adoption angle?
Yeah, it signals a different level of validation, And then there are the broader macro trends working in the background.
Like what?
Well, things like a potentially weakening dollar, or at least talk of it, speculation about interest rate cuts coming down the line, that tends to make non-fiat assets like Bitcoin look a bit more attractive.
A hedge, maybe?
Potentially, yeah. Or just diversification. And of course, you had the latest Bitcoin halving.
Right, the supply cut.
Exactly. It was anticipated, sure, but it directly cuts the new supply of Bitcoin by half. And historically, that supply compression, that shock, often doesn't hit the price immediately, but rather weeks or months after the event itself.
Interesting. So it's not just one thing, it's this combination. The ETFs opening the doors, companies stepping in, the macro environment, and the built-in supply reduction.
Precisely. They all came together to drive demand and push the price to these, unprecedented levels, setting the stage for this whole is it too late discussion.
Okay, so here's where it gets really interesting, right? Even after this massive run-up, lots of analysts are still bullish. They think Bitcoin could keep climbing. Why? What's fueling that optimism?
Yeah, and what's fascinating here, I think, is how these different layers of demand are kind of converging and feeding off each other.
How so?
Well, first, you have the absolute bedrock scarcity, that hard limit of 21 million Bitcoins. That's always been a core driver.
Digital gold argument.
Sort of, yeah. But what's maybe different in this cycle is how that scarcity is interacting with this newly liquid, easily accessible institutional market thanks to the ETFs.
So the scarcity means easier access.
Exactly. Then there's what people are calling institutional FOMO, fear of missing out. You're seeing these huge asset managers, even some pension funds who were hesitant before, now finally getting some exposure.
Because their competitors are.
Partly, yeah. It suggests there could be significant more money waiting on the sidelines, still needing to allocate just to keep up. So further inflows, potentially.
Okay.
Then the macro trends we mentioned, its role as maybe an inflation hedge, a way to diversify away from dollars or euros.
Still relevant.
Very. And you can't discount the retail momentum either. I mean, headlines screaming Bitcoin hits $90, that definitely sparks wider public interest, brings more people in.
The psychological effect.
Absolutely. And you even see some analysts throwing out really high numbers now, like $150,000 by next year, if this momentum keeps up. The thinking is we might still be in the relatively early stages of this particular cycle.
Wow, $150K, that's ambitious.
Yeah.
But okay, those are some powerful tailwinds. It paints a compelling bullish picture.
It does.
But let's be real for a second. It would be totally irresponsible not to talk about the risks. This market has seen some brutal storms before.
Oh, absolutely.
So what are the essential reasons for caution? What do people need to be aware of? Is there one risk you think maybe gets overlooked sometimes?
Yeah, this brings up a really important point about, managing expectations, understanding the inherent risks, which can be pretty brutal, as you said.
Okay.
Number one, and it's the most obvious, is just the sheer volatility. Bitcoin's price swings are infamous. We're talking potentially 20% moves in just a few days.
Yeah, I remember seeing that.
And historically, it has crashed, absolutely cratered, by more than 80% in previous cycles.
80%, wow.
So yeah, it is definitely not some guaranteed path to riches. That has to be understood up front.
Right.
Then you have regulatory risks. This is still a big question mark. Governments around the world are still figuring out how to deal with crypto. A sudden clampdown, new heavy taxes that could seriously hit the market.
And it's global, so a move in one major country could ripple out.
Exactly. It's not contained. And finally, there's market sentiment itself. It's incredibly fickle in crypto. The whole narrative can just shift on a dime. Liquidity can dry up fast.
And then the price follows.
And the price can plummet. There's this risk of what they call reflexivity, where the price going down makes people more negative, which makes them sell, which pushes the price down further. It feeds on itself.
That sounds dangerous. So volatility, regulation, and just fragile sentiment.
Those are the big ones, yeah. You have to go in with your eyes open to those.
That 80% drop number?
Yeah.
It's such a stark reminder, isn't it? This is not for the faint of heart. I definitely remember friends who thought they'd timed it perfectly, then poof.
It happens fast. Really underscores the point about managing expectations, like you said.
Yeah. Okay, so bringing it back, what does all this mean for you, the listener? It's the multi-million-dollar question, isn't it? Is it actually too late to buy Bitcoin now at these levels?
And honestly, there's just no simple yes or no answer to that. It really truly comes down to you and your individual situation.
Okay, so what should people consider?
Well, first off, your time horizon. Are you thinking long term, like 5 years, 10 years out? If you are, then maybe today's price, even an all-time high, might not be the most critical factor in the grand scheme of where Bitcoin could be a decade from now.
Right, perspective matters.
Hugely.
Yeah.
Then position size. This is maybe the cardinal rule, and it's worth saying again. Never invest more money than you can genuinely afford to lose.
The golden rule of investing, really.
Absolutely. And related to that, even at all-time highs, a strategy many smart investors use is dollar cost averaging.
Explain that quickly.
Sure. It just means buying a fixed dollar amount of Bitcoin on a regular schedule, say every week or every month, regardless of the price.
So you buy less when it's high, more when it's low, automatically.
Exactly. It smooths out the ride, takes the emotion out of trying to perfectly time the market highs and lows, which is, frankly, almost impossible.
Makes sense, especially with something this volatile.
Right. And the last piece is your personal risk tolerance. You have to be honest with yourself. If a, say, 50% crash in your Bitcoin holdings would cause you serious stress, sleepless nights, then Bitcoin probably shouldn't be a massive chunk of your overall investment portfolio. It's just not worth the anxiety for some people.
So know thyself.
Pretty much. If you connect all this to the bigger picture, it's really about making sure any investment fits your personal financial comfort level and your actual long-term goals, not just chasing the latest hot trend or headline.
That's really sound, practical advice. Okay, so stepping back a bit again, looking beyond today's headlines, beyond these record highs, what might come next for Bitcoin on its journey? What are some trends or maybe scenarios we should be keeping an eye on in the, say, coming years?
Yeah, looking ahead, well, continued institutional adoption seems like a key theme. It's not just about more money flowing in, potentially. It's about deeper integration.
How so?
You could see Bitcoin becoming maybe a more standard part of diversified investment portfolios, almost like how gold is treated by some today, a small allocation for diversification or as that potential hedge.
Interesting.
But conversely, keep a very close eye on regulatory headlines. That remains a huge swing factor. An unexpected, unfavorable move by a major economy, like we saw with China in the past, could still trigger really sharp sell-offs.
So regulation is still the wild card.
Definitely a major one. Interestingly, though, there's also some speculation that eventually, way down the line, as the market matures and the supply gets even tighter relative to demand, volatility might actually start to decrease over time.
Become less wild.
Potentially, making it perhaps a more stable store of value. That's the long-term hope for many proponents. We might also see totally new use cases emerge for Bitcoin or its network as the tech matures and maybe integrates with other things.
But it's still evolving.
Oh, absolutely. But, if history is any guide at all here, we should probably expect both. Expect potentially massive rallies driven by innovation and adoption, and expect brutal corrections as the market keeps finding its equilibrium. It's likely going to remain a dynamic process.
Okay, so wrapping things up here, this deep dive, our goal was really to give you a comprehensive, balanced view of Bitcoin right now at these record highs.
Right.
We tried to pull out the most important bits of knowledge from the analysis out there, cut through some of the hype.
Yeah, and we really hope you'll take some time to reflect on the different perspectives we talked about. Those powerful, bullish arguments, yes, but also the very real risks, and maybe most importantly, those personal factors for your own financial situation.
Critical thinking is key.
It really is, especially in a space like this that's just overflowing with strong opinions and information, some good, some not so good.
Right. And as you do reflect, maybe here's a final thought to sort of mull over. Given Bitcoin's absolutely wild ride from being this obscure digital experiment just over a decade ago to now grabbing mainstream headlines and hitting these massive valuations, despite its volatility, what does that whole trajectory maybe tell you about the future of finance itself? And maybe what questions does it raise for you about your own financial landscape going forward?
That's a great question to ponder.
Ultimately, though, the timeless advice always applies, doesn't it? Do your own research, try to think long-term if you can, and please never invest money you can't truly afford to lose.
Couldn't say that better.
Well, thank you so much for joining us on this deep dive.